Hello everyone, and welcome back to our channel. The US July CPI data came in line with expectations. The year-over-year rate fell from 3.5% to 3.4%, while core CPI dropped to 2.5%, its lowest level since March 2021. This means concerns about a Federal Reserve rate hike in September are easing, with the market-implied probability of a hike falling to around 60%. However, there is a very clear divergence in the market. The technology giants are falling, while AI computing and memory chip stocks are surging. Some capital is rotating out of the Magnificent Seven and into the upstream and downstream segments of AI infrastructure. Memory and IT hardware have become the most obvious magnets for capital, and the market consensus that AI goes far beyond GPUs is strengthening rapidly. This market divergence directly validates the central thesis of our previous episode. In our previous episode, we focused on a major theme. The AI race is shifting from competition in technology and chips to competition in the ability to mobilize and deploy capital. Nvidia, working with several major funds and investment groups, plans to channel more than $500 billion of third-party capital into AI infrastructure. We argued that this capital transmission chain could benefit four companies at the same time: Nvidia, Microsoft, Micron, and Blackstone. 2 days have now passed, so let's see how accurate those forecasts were. Let's start with Nvidia. We said at the time that NVDA was at a short-term high around $218 and identified two entry setups: buying after a pullback or entering on a confirmed high-volume breakout above $236. On the 11th, Nvidia did pull back. It opened higher at $222, moved lower throughout the session, touched a low of $216.20, and closed at $217.50. Our directional call for a short-term pullback proved entirely correct. Next, Microsoft. This was our most accurate call. In the previous episode, we clearly said that Microsoft's short-term RSI had entered overbought territory and that the stock was due for a technical pullback. We suggested that conservative investors wait for a decline into the $485 to $497 range before entering. On the 12th, Microsoft fell 2.26% to close at $492.43, with an intraday low of $491.52, precisely within our suggested $485 to $497 entry zone. More importantly, Wells Fargo sharply raised its Microsoft price target today from $650 to $700, while maintaining an overweight rating. This means that mainstream Wall Street institutions are beginning to recognize the logic we discussed in the previous episode. Once AI infrastructure becomes a financeable asset, a company such as Microsoft, with an end-to-end demand and monetization loop, will become one of the biggest beneficiaries. Now, let's look at Micron. This was the stock where we expected the greatest earnings upside. In the previous episode, we identified two entry setups: buying on a pullback to $820 to $840, or entering after a confirmed high-volume breakout above $925. On the 12th, the entire memory sector surged, and Micron reached an intraday high of $935.80, successfully breaking through our $925 confirmed breakout entry trigger. It closed at $911.29, up a strong 4.92%. If someone had bought near the low of approximately $844 on the 11th and sold at the closing price of $911 on the 12th, the potential gain would have been about 7.9%. Although the stock pulled back slightly from its intraday high before the close on the 12th, the overall upward structure has now been confirmed. Finally, Blackstone. In the previous episode, we said that Blackstone was testing the $141 to $145 resistance zone and that investors could enter on a high-volume breakout above $146. On the 11th, Blackstone gapped higher at $141.85, reached an intraday high of $148.36, decisively breaking above $146, and closed at $147.17, up 3.89%. It is still holding firmly above $146. Now that we have reviewed the calls from our previous episode, let's discuss exactly what to do next. First, Nvidia. At the current price of $224, Nvidia is only about 5% below its previous high of $236. From a medium-term perspective, the upward structure remains intact as long as the stock stays above $208. We recommend a medium-term holding period of approximately 2 to 4 weeks. The first target is a breakout above the previous high of $236, and the second target is $255 to $260. Set the stop loss at $208. This is the original stop level we identified in the previous episode, and the key level keeping the medium-term structure intact. There are two conditions for adding to the position. Enter on a confirmed, high-volume breakout above $236 and raise the stop loss to $220. Or, if the stock pulls back, scale into the position around $216 to $218. Next, Microsoft. The stock has just completed a healthy pullback. At its current price of $492, it has moved below the 5-day moving average, but remains above the 10-day moving average. A classic breakout followed by a moving average retest. We recommend a medium-term holding period of 4 to 8 weeks. The first target is a breakout above the previous high of $520, and the second target is $550 to $567. Set the stop loss at $475. A break below the 30-day moving average would weaken the trend. Conditions for adding to the position. If the stock continues to pull back to around $485 to $489, near the 10-day moving average, you can add to the position. Alternatively, you can enter on a confirmed, high-volume breakout above $505. Now, Micron. After falling from its high of $1,255, Micron is now in a basing and rebound phase. The sharp rally on the 12th broke through resistance at both the 10-day and 30-day moving averages, and the MACD may be forming a bullish crossover. However, please keep in mind that Micron is the highest risk stock among the four. We recommend treating it as a short-term trading vehicle, with a holding period of 1 to 2 weeks, rather than as a long-term position. The first target is $960 to $980, the resistance zone around the 60-day moving average. The second target is $1,050 to $1,100, a previous high-volume trading zone. Set the stop loss at $850. A break below that level would invalidate the rebound structure. Conditions for adding to the position. You can add on a pullback to $870 to $890, or enter on a confirmed, high-volume breakout above $940. There are also several risks facing Micron that should not be ignored. Excessively rapid expansion of HBM capacity could lead to oversupply. Netlist has filed the DDR5 patent infringement lawsuit, and a potential investment in SK Hynix by Temasek could intensify competition. If any of these risks worsens, the stock could retest levels below $800. Finally, Blackstone. BX is still trading above the $146 breakout level. However, it has encountered resistance near $148 for 2 consecutive days, so a short-term consolidation may be needed. If the stock holds support at $144, the medium-term target of $150 to $160 remains unchanged. We recommend a medium to long-term holding period of 2 to 3 months. The first target is $155 to $160, and the second target is $170 to $175. Set the stop loss at $138. A break below that level would invalidate the breakout. Conditions for adding to the position. Add on a pullback to $142 to $144, or enter on a confirmed, high-volume breakout above $150. There are also 2 negative developments to watch. Blackstone is considering abandoning a debt financing plan worth approximately $3 billion. In addition, its chief legal officer sold 45,000 shares on the 11th, worth about $6.62 million. For now, however, the market appears to have absorbed these developments. Taken together, these 4 companies form a complete AI capital chain. Blackstone mobilizes the capital, Nvidia converts that capital into computing platforms, Micron supplies critical memory components constrained by limited supply, and Microsoft monetizes the resulting computing capacity through Azure and its enterprise customers. However, I want to emphasize several points for retail investors. First, do not chase stocks at elevated prices. All the entry points we have provided are right-side trades based on pullbacks or confirmed breakouts. Buying at short-term highs makes it far more likely that you will become trapped in a losing position than make a profit. Second, always set a stop loss. Many people lose money not because they chose the wrong stock, but because they failed to cut their losses. We have provided a clear stop loss level for each stock. These levels are not casual suggestions, they are your lifeline for protecting your capital. Third, focus on the fundamentals. Technical analysis helps determine when to enter, but fundamentals determine whether you can continue holding the position. For Nvidia, monitor the amount of financing actually deployed and new orders. For Microsoft, watch Azure growth and the conversion of AI demand into revenue. For Micron, track HBM pricing and market share. And for Blackstone, monitor assets under management in AI infrastructure. These data points matter more than candlestick charts. In this round of AI competition, technology determines whether a company can enter the race, chips determine whether it can scale, and the ability to mobilize and deploy capital ultimately determines how far it can go. Disclaimer: the above content is solely an objective analysis based on technical and fundamental factors and does not constitute investment advice. Markets involve risk, and investing requires caution. Please make your own independent investment decisions based on your risk tolerance. That's all for today. If you found this content helpful, please like, share, and subscribe. See you next time.